Hey, good morning. It's Mike Zschunke with Berkshire Hathaway Homes and Shipton Properties in Scottsdale, Arizona. Friday morning market chat live. We're going to talk about residential, we're going to talk about commercial, and we're going to talk about the economy a little bit. First, we always start off with single family detached inventory. Took a dip this week all across the board, and multiple listing service, Maricopa County and Scottsdale. And we're seeing a lot of properties expire, canceled for the summer. I don't always agree with that strategy, but people do it. So, families are relocating. Other states are still in school. So they're waiting for their kids to get out of school here. We've been having those conversations. They're coming as soon as kids are out of school, and they're going to start shopping for homes. Scottsdale's a pretty family. I know I've mentioned that before, but single family residential in Scottsdale, homes under contract for April were up 20% over this time last year. New listings down almost 5%. So that's where that balance goes. We're going to see a summer. We're going to see this push up into a little seller's market here just because of inventory, low inventory. And, remember every area has its own deal going on there. Closings this week down a little bit from last month. But again, I think, 15 or 16% higher than last year. So we're moving. Last year was slow, but we're moving. Things are keeping busy. People are looking. Buyers are here. They're making it happen. The media wants you to think that it's doom and gloom and people aren't buying houses. They are. There's solutions to everything. We've had a couple interesting conversations this week on commercial property and residential. Just how can we make it happen? You're stuck in your 3% mortgage. What do we got to do? Do you have enough equity? You have enough equity. We can get you downsized into a new property. And that's actually popular too. You're not necessarily, a lot of people are not the baby boomers, I guess. It's not necessarily downsizing in quality, but just downsizing in size. It's what do they call it? I don't remember the term. It's like a luxury downsize, but they've got enough equity. Or for Scottsdale Phoenix area, a lot of people coming from the Washington, LA area, Chicago, New York lately, especially. We won't get political on you just yet, but getting a lot of calls on the small business owner coming to Arizona. Interesting, Paradise Valley homes under contract was shot up. Paradise Valley homes under contract for April was 41% higher than this time last year. And that's that luxury segment, the luxury and ultra luxury. 10 million, 5, 10, 15 million, those are moving. And it'll be interesting over the summer. I think that market's going to take a little bit, just level, not take a dive, but just level off over the summer. But that 1 to 3 million, which is typical for Scottsdale and the 85259, DC Ranch, North Scottsdale area, I think that's going to continue just as families keep moving in. I think we're going to stay pretty steady this summer. Of course, nobody knows. I say that. It's funny, I did read an article, Canadians are back. There's 66% of home searches from international searches were in Arizona. So 2024, 2025, Canadian and US, the Canadians took a little break. But they're back again, and they're shopping for houses. The currency, it is what it is. I have to update an article I do every year about the U.S. dollar and the Canadian dollar. And if you bought in 2010 and you're from Canada and you sell now, you have done very well. Very, very, very well. But now we've got the Canadians shopping again in Arizona. So that's pretty interesting. Pricing, another paper. I like to write a lot of papers and little articles and blog posts like that. The longer you have, it's a proven fact. I'll show you the numbers when I'm done with the article. The longer your home or property, commercial, land, whatever, is on the market, the less it's going to sell for. I've got the statistics to show you. If you're over 120 days on market, you are going to get 2.5% lower in Scottsdale than if you sold within the first 30 days. That's 40 grand on the average price of the 1.3, 1.4. in Scottsdale or the North Scottsdale area, that's 40 grand. Just by not listening to your agent, not hiring a local expert to show you the numbers. It's commercial and residential. The stats are what they are. And, it's not, I was going to say this for the end, but real estate's emotional. It's not always logical. The math is the math is the math. It is what it is, but logic does not always come out ahead. So you can't make someone sell if they don't want to sell, if they think they're sitting on a $10 million property, they think that, and that's fine. It's my job to make sure. We get a lot of people coming from out of state, and it's my job to make sure you don't overpay. Arizona's not for everyone. I'll tell you that right off the bat. I absolutely love Arizona. I love it. I wish I would have come back. I went to ASU. I wish I would have come back here 20 years earlier, but we had to go out and learn that for ourselves. But it's not for everybody, but I want to make sure that as a buyer and you're relocating here, you don't want to pay too much. And we've gotten close on a couple. We haven't had the buyer sell their property within 6 months or that for a lower price. So that's kind of my expertise, is the pricing market and to protect you. Sellers want to test the market. They want to leave room for negotiating. It just doesn't work. Look at the automotive industry. Who are the hot ones? AutoNation, Carvana. They learned that if you're selling a product, price it aggressively, you can always say no. Did you know that you can ask, say $1 million for your house? You can get $1 million offer and you can still say no. Stay in control of the deal. Stay in control of the deal. So just price it right. My job is to get the most eyes on your property, and that's what pricing it right. Consumers are pretty smart. They know the market. They know what's out there, and we send a lot of properties out to buyers. We've got some that are just keeping an eye on the market and doing things like that. But price it right. You'll get the eyes. You'll get the views. If it's too high, they're going to click across the street here. They bought it 6 months ago for 1.2, did a very nice job flipping it, sold it for 1.7. Now a new flipper came in, thought they could clean up the landscaping. They're asking 1.9. They're crazy. Never going to sell. Never going to sell. If it does, good for them. That helps our market. But anyway, also multi-generational homes. 14% of home sales last quarter went to multi-generational buyers. And mostly Gen X, which is what I'm dealing with now. With like I said, I've told you, my mother-in-law lives with us, and it's great. I love it. I take my laundry is done the second I take it off, and there's always food on the stove. So she's awesome. But multi-generational living, senior living's become expensive. So what was it? 21% of those multi-generational homes sold went to Gen X. And I'd never had a problem with I'm 55. I can say 55. It's a funny thing because your kids are out of the house, they're going, and now your parents start coming in. You got to take care of them. So I'm all for it. It's great. It's good to see. And most buyers, they've got to miss out on 1 or 2 properties. That's just part of the process. There's so much information out there lately. They've got to, before they learn the market, that there's some deals out there, but you got to make an offer strong enough to get the seller's attention. So they've got to miss out, buyers these days. It's just part of the process. We expect it. Write up 1 or 2 offers, miss out on those, and then you get serious on the 3rd offer. It's interesting, just part of the game. It is what it is. Commercial real estate, the first quarter of 2026. United States commercial investment volume reached $112 billion. That's an 18% increase in commercial investment purchases or transactions in the first quarter compared to last quarter. That's big. Commercial real estate kind of pulled back the last few years, but now we're back to 2017, 2018 levels. Excuse me a moment. Woo! That's why we're live. And so what we're saying, we're back to 2017, 18. There's money out there, capital's flowing, a lot of private money wants to get into real estate. The mom and pop retail centers, they pick them up, they clean them up, and they raise the rents, and they make a great return on it. So it's good to see that flow get back. We went to a commercial Scottsdale area of real estate realtors commercial forum this week, and ASU Economic Neil something. He's the director of ASU Economic Development, and he works with the GPAC, Greater Phoenix Economic Council, bringing companies to the area. He said there's over 50 companies they're talking to right now to relocate to the Phoenix area. And it's not just that TMC in the Northwest. That's just the beginning. There's a lot of suppliers. What was it? Taiwan and If Taiwan wants a relief on their tariffs, they are committed to invest $500 billion in the United States. Most of that is in the Phoenix area and Silicon Valley. Silicon Valley companies are tired of paying the taxes and the rent of Northern California. Now we're the Silicon Desert. What did I see? Phoenix area, Metro Phoenix is becoming it is the top market for biosciences, chip manufacturing, and something else. Health sciences. Biosciences, health sciences, I don't quite know the difference, but medical background things. Phoenix area is the #1 for corporate relocations for that. Just an attractive area. It's a business-friendly state. And still, we have over 200 people a day moving to the Phoenix area. So Phoenix keeps growing. Conventions come here. What did I see? Convention inquiries were up 20%. We've got Finish Line Auto. They're a auto club. You know, those car condos. They are coming out of California. They're in California. They bought 10 acres in the Scottsdale Air Park. Scottsdale Air Park is getting some big numbers on their commercial properties. They're going to do 140,000 square feet of luxury car condos. I would have thought we're a little bit saturated, but they see the opportunity, and I still get inquiries about the small industrial space like that. Consumer Cellular. I don't do a lot of leasing, but they signed the largest lease this year on Raintree and 101, 123,000 square feet to consolidate some offices. So that North 101 area I always talk about, they see the people want to live around there like we do, and they want to work. It's a great location. You're up out of the hustle and bustle of like downtown Scottsdale, but you're close enough, and you're up in the mountains a little bit. It's beautiful. So the Loop Industrial Complex, same area, they broke ground. And then Reverb, Scottsdale is getting a Hard Rock Hotel down by the Talking Stick. That's interesting. They broke ground down there. You'll see the tractors going back and forth, but that's interesting land there. That's all reservation land, and the reservation has learned that they can do land leases, attract big developers. It's called the Scottsdale Entertainment District, the 101 and halfway up 101 and McDowell Road area. So by Talking Stick. So commercial properties moving. It's really moving. We've got that building on Roosevelt Row, downtown Phoenix. It's walking distance to Chase Field, walking distance to ASU's new medical school, walking distance to Phoenix Convention Center. Right now it's set up as a hair salon downstairs with an income-producing apartment upstairs. It could be an office. I think it was a real estate office at one time. I know it was a real estate office at one time. It could be an insurance office. It could be a cafe, a smoothie. The guys next door, they're great guys. They sell hot dogs. It's a Roro Dogs. They're great guys. But it's a great building. It's just around $1 million. 2 levels, work downstairs, live upstairs. It's a good investment property. That area is really getting a lot of eyes on it. Economy. I had a hot Chicago PMI number this morning. You know, we had a lot of data come out this week. Chicago PMI is a measure of business conditions in Chicago. Kind of sets the tone for the whole United States. Maybe that's moving away as people move around, but still, it was a hot number. It's just business conditions in Chicago. It was 62. Anything over 50 is positive movement, and that goes, I think it was back to 2022. So we're kind of moving beyond this pandemic. You know, we're 5 years, 6 years removed from this pandemic, and that kind of threw everything off, put too much money into the economy. But we had real GDP yesterday, grew at 1.6%. As expected, a little bit slower growth. We had core PCE. That's a measure of inflation. Came in at 3.3% year over year. We're still ahead of that Fed's 2% target rate inflation. Jobless claims yesterday, pretty steady. You know, we've got super low unemployment still at 4%. That's considered full unemployment. So the job market's pretty stable. Durable goods orders jumped up, although most of that was airplane sales. And wait till next week or next month. China ordered 200 Boeing jets. That's really going to touch on that number. That's going to be a huge number next month. But anyway, it just shows us that, you know, economic growth is pretty steady. It's kind of slowing a little bit, slightly. But inflation. We've still got that out there. Consumers are still spending. They're spending. You know, they're trying to keep up. They're lower. I don't know the numbers. They're saving less and putting more on credit cards, but they continue to, even as prices rise, they continue to spend. And that's all great until it's not. But it was Logan Matsushima came out with the chart yesterday about renters versus owners. And I believe in owning. Renters are more likely to default on their loans than homeowners. I thought that was pretty interesting real quick. Look up Logan. He's one of the ones that tells the truth against the doomers and gloomers. John Lavorgna, he is a managing director of SMBC Americas. It's a hedge fund money manager economist. He made a pretty good case yesterday for the Fed raising rates 100 basis points over the next of the year. We've got core inflation above 2% Fed target rate. We've got job market stable. Some price lags due to supply if this thing over in the Middle East keeps going. And we've got good earnings. Dell earnings had the highest earnings since 2018, Dell Computer. So we've got good company earnings. Companies are making money. If companies are making money, people are working, the economy continues to roll along. But again, markets and mortgage rates, they're set on expected future returns. What they say today doesn't really matter on that. They're expected future values. And, like today, I guess bonds were down a little bit. We had some announcement on the conflict. We've seen, how many Fridays do we have to see this? Friday morning, there's an announcement about things being leveled out and agreed upon, and then something Friday afternoon happens, and then oil and bonds shoot up again. It's all noise. But like I said earlier, logic doesn't always take place. Math is math. So anyway, my role is to take out the emotion of your deals, represent you on the buy or sell side, educate, facilitate, advise, residential, commercial, land, investment properties, and, just the experience. Make sure your agent knows what they're doing. Make sure they're experienced and let them show you the numbers. Everybody has an opinion. There's another phrase that I'm not going to say, but everybody's got one. So anyway, look at the facts, look at the numbers, whether you're buying or selling. I've got running around to do today. I've got some paperwork to do today, some reports to produce. But give me a call. I'm here, 203-733-5877. Real quick, just finishing up a 72-hour quarterly fast. If you haven't done one and you're, I don't know what age, 72-hour fast, do some research. It's not for everybody, but it makes you feel great. So I'm going to go eat something now, because actually we're 86 hours into it now and it feels great. Just clears your head, makes your body feel good. I'm not a doctor. Check with your doctor first. I happen to be married to mine, so that kind of helps. But anyway, have a great day. Be smart. Be safe. Thanks for watching. I truly appreciate it. And have a great weekend.